Well, hello and welcome and hello. Thank you for tuning in to Un Poco Moss, the show where we give you just a little bit more. My name is Danny Deals. On behalf of Hurricane Lopez and Stock Karen, we would like to say hello and welcome and welcome and hello, guys. It is 9/19/23, September 19th. The time is 10:20 a.m. Toper time check out here in beautiful, dreary Los Angeles, California. It is 20 out in NYC. Hope it's a great day wherever you are, guys. The SoFi stock is up 3 pennies on the day. Again, moderate volume at pretty low volume, actually 11.5 million shares traded. Did a patent mountain and then sell off there in that first 15, 30 minutes. And then instead of doing the hump, it kind of just traded very slightly up and sideways all day, as you can see. Nasdaq is down half a point. The market was down quite a bit early, just sold off early, and then kind of been creeping upward and to the right all day. But volumes have been low. Everyone is very cautious ahead of the Fed meeting. So just wanted to bring you a quick update on the stock, where I see it going. Obviously, did not break through nine convincingly. Sold off hard the other day, kind of inexplicably, but that's SoFi. It was sitting up around, $8.80, and then it just like fell off a cliff there from 870 to 8, like basically instantly. There's just, this is the type of shenanigans that the mechanics do on the stock. The short has actually been increasing a little bit. Another good article out on Seeking Alpha that kind of addresses a lot of different things, valuation concerns, but it also kind of goes into the moat, which I was sort of fascinated by in the Tanner's video about the Morningstar report on SoFi and how they gave a value that, was, sort of surprising, I think, to him and to myself and to many people, that they valued the stock as highly as they did. I think it was, I always forget the number, 15, 14 and a half, but it was a huge upside from here. And then that reminds me, guys, John Hecht with Jefferies, who is probably the best analyst covering the SoFi stock, solid five-star analyst, reiterated yesterday buy rating on the SoFi stock with a $15 price target, representing 73% upside. And even all the big boys, guys, JP Morgan 15% upside, Citibank 38% upside. Mizuho has Chiaverini, the Chia Pet at Wedbush, has a 66% downside on the stock, sell rating at $3. He is outstanding. Just if you had a monkey eating its own feces, and just picking stocks out of their butt crack, they would do better than this guy. His success rate is 36% and his average return is negative. But again, I would contend his job is not to be right. His job is to, lead short attacks and basically reiterate downgrades whenever his masters tell him. But anyway, I don't want to get too deep into the Chia Pet pool. And of course, you have the bologna sandwich. Again, he's terrible. But some of these bigger, like Bank of America, even 32% upside on the SoFi stock. There's Chiaverini again. He has another rating on the bologna sandwich again. You see these bearish analysts. Danny Dolev, touchdown Danny Dolev with Mizuho. He's not really highly rated on this site, but he's actually quite intelligent. I like him. He's at 15 as well. So in any case, guys, taking a look at the chart, like the SoFi stock looks very good. $8.50 kind of stepped in as support there. This is, of course, our sort of medium-term trend line in blue. That's the 813 level there. And this is more of the trend line, the sort of uptrend the stock has been working in since the sell-off from the pump and dump. So it sort of turned the corner right here, just over a month ago, flattened out, and then ever since that point, guys, has been making, you know, higher highs and lower lows. And I know it may not really look like that at first, but you have to kind of take an overview, I guess, and just look at the trend. You're all the way down here at 8, and then you're here at 8, 810, 820, dips down here, but this is a total fugazi, and then you get up to 840, and then it looks like it could be bottoming out here around 860. And then again, the trend here, you're at 880, you break out up to about $9.15, you're rejected, but you're still, you're still sitting right in that uptrend in the short term and also in the medium term. I mean, the stock coming through since June, there hasn't been anyone selling the stock under $8. And that continues, guys. This trend line, short term, medium term, over the last 3 weeks, over the last 3 months, I would contend that support has held very strongly above 8 at that 813 levels where I called it, but obviously that number is somewhat fluid, just depending on what the algos decide to do. And I'm looking for this stock to push up off of this line right here. I mean, we've seen that here, 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 and I expect it to happen again there. Now, it's pushing down hard here, trying to hold it into that channel, and that's fine, guys. I mean, there's not a huge compelling reason to buy the SoFi stock right now. Noto's kind of warning, I think, that Q3 is not going to be, absolutely sensational, like depreciation, amortization, stock-based compensation he said would be up. He did basically all but guarantee that they would have a really good number in terms of bank deposits. I do expect member growth to be solid. I don't necessarily think it's going to be as good as last quarter, but hopefully it's at least in that same neighborhood. Um, Taking a look at the options, guys, these were bright green. These $9 options yesterday, it was just, it was just screaming at the beginning. The stock was running up. And again, I think market makers dumped those options onto retail and then, sold the stock back off down toward 850. And there's no real action at 850. There's no real action at 950. All the action is at 9. So you'd expect, probably the stock, if the market doesn't tank after the Fed, um, probably expect the stock to push up into that 9 area because market makers will probably want to cover and accumulate to a certain degree, but they're still going to want to kill those options because I just don't see any, major catalyst pushing the stock up here. I don't see why. So many call options there at $8 or at $9. I'm sorry, maybe some of these were purchased well in advance, but I feel like they were green at the beginning of the day yesterday, and retail gets all excited, buys a lot of these options from the market makers, and then they just crash them toward the end of the week. They did, the exact same thing last week, held the stock at like $9.06, making those options worthless. It was just completely predictable. But in any case, guys, there's a really, really good article. SoFi Road to Top 10. It's by Ryodo Sofian. Don't really know this guy too much, but I read this whole article. It's over on Seeking Alpha. I highly would recommend you get on over there and read this article. There's no way I can go through this whole thing. It's very, very long, and I actually made some notes on it. But the one thing I did want to mention again was that Morningstar was saying, their analyst was saying there's no economic moat for SoFi. And he goes through the history and he goes through the business segments and all that. But then he goes into what they call moat. I could see why, as a technical definition, Morningstar would say they don't have a moat because there's nothing stopping anyone else from recreating any part of their business. I think creating the entire business would be very, very expensive and take a long time. And on the tech side, you'd have to buy it or you'd have to build it. I don't think you can just step in and build Galileo, Technesis. You obviously can't just jump in as a fintech and get a bank charter. Even if they were issuing them, which I don't think they are, that process, that took SoFi a couple of years, and they were buying out an existing bank. Um, and the feds have indicated they're just not going to give out a lot of bank charters to more fintech companies. They're sort of tightened down. SoFi got in just under the bar. But whether you want to call it a moat or whether you want to call it a competitive advantage, strategic advantage, I think it's a competitive advantage SoFi has as they run through this technology. They lower costs, they reduce customer acquisition costs, and then as a strategic advantage, they are able to innovate faster and add features. And, I really haven't seen enough of this on the app, though. I don't really feel that SoFi's app is particularly innovative. I do love their suite of products, how it works together. I like the overall, user experience, but I don't see anything, terribly innovative or cutting edge in terms of their offering in banking, investing, credit cards. It's all just basically ho hum. It works great. I'm a user. I have no problem with it. I see why people like it. People love the interest rates. But thus far, I'm not seeing any like radical innovation within the SoFi ecosystem. It's just they do a lot of things very competently and very well, and I think cross selling is going to come on. But okay, so three competitive moats for SoFi: technology, cost advantage, and switching costs. So I'm just going to take a very quick look at these guys. Members can manage their finances through a single app, and they talk about the bank charter. The only company I know that's a competing platform that comes close to SoFi is Block. Block doesn't have the banking as a service component that Galileo offers. So, technology wise, SoFi has a more complete stack among competitors, which offers a stronger value proposition for everyone. Having a vertically integrated technology stack means that SoFi is able to collect more data at each stage of the product or service, which allows a company to create a better overall customer experience. Cost advantages. Okay, because of the data advantages and through offering better products, SoFi is able to gain cost advantage moats. They call that the financial services productivity loop. And this is basically cross selling, taking advantage of all the data you get. A lot of people make fun of like Relay. Oh, what good does it do you to have members, that aren't giving you any revenues right now, just manage all their finances through you and budget through you and get financial advice? People are so short-sighted and stupid, guys. It's a huge deal because you can basically see what bills they're paying, what debts they owe, what their needs are, and then offer products and so it's going to pay off, guys. That's why this is not a short-term like pump and dump type of investment or a swing trade. This is for somebody looking long-term, who wants to get in on the bottom floor of a company that will eventually be a top 10, you know, financial services company. And they talk about the 10th is Bank of China. It's like 140 billion market cap. So SoFi would have to 15x from here. And a lot of people, a lot of people smarter than myself think that's quite possible. Okay, so they're talking about they offer best of breed products, unit economics, the banking charter, being a neobank with no physical branches leads to better unit economics. And this is when they get down later in the article, they talk about the 30%, that SoFi is basically going to have a better margin, better return than any traditional bank could possibly hope to have. So when people say, "Oh, SoFi is just a bank, value it at just a bank," they're talking about getting realistically to that 30% number, and no other bank, no other traditional bank can touch those types of ROI. So it's not it's if you want to say value them as a bank, you have to look at the growth, you have to look at the numbers. And this is what this article does a really great job. There's tons and tons of data in here that just explains why the profitability is going to be there in Q4. I mean, if you look at the contribution margin, the lending is obviously huge. I think they can have that at 70%, but financial services is basically going to be profitable, it looks like, next quarter. And then or this quarter, basically Q3, and then in Q4, it should be solidly profitable, and all of their segments will be profitable. But of course, they're still hitting us hard on that stock-based compensation, 75 million bucks or so per quarter. Would love to see that dialed back. Would love to see the chief technology officer stop dumping shares constantly. I know the stock's up off of $4.5, $5. So, again, I can't blame people for diversifying and selling some shares. That's perfectly legitimate, but it's just, it doesn't inspire a lot of confidence when the app is down and the updates aren't there. And, there's still no covered calls. There's still no innovation. The app basically looks like it's been stuck in, AOL beta mode since 1995. I just don't think it's that impressive, personally. I would like to see SoFi take this sort of technology, cutting edge modules, innovation, and, give something a little bit different. I know they're giving, great interest rates. I know they have a great suite of products, but it's just like, it's getting a little bit stale for me, as a customer, as somebody who uses the app every single day, invests, credit card, would definitely like to see some a little bit more advancement on the trading platform. I'm not saying I need any complex option strategies, but just to be able to do covered calls and basic things like that, I don't think is a lot to ask. I think that's they've had more than enough time to implement that, and it's kind of ridiculous at this point. But guys, again, I would just recommend you read this article. It's talking about the financial health of SoFi as a company. Their tier one capital ratio, 16.4%. That's far better than JP Morgan, who's almost 14%, and Bank of America, who's 11.6. So they're more liquid and less leveraged than those institutions. They're also growing a lot faster. They're also growing deposits a lot faster, which will grow the balance sheet. It had 18.6 billion loans on the balance sheet, with 12.7 billion of deposits as of Q2. Noto has mentioned that adding 2 billion of deposits each quarter, and he feels super confident about reaching that target. I think that number is going to be significantly higher in Q3 and way higher in Q4. I think we could see 3 billion in deposits in Q4 between you, me, and the wall. As deposits grow, so should the loan portfolio. So we're going to see the balance sheet get bigger. SoFi will keep moving up that list of biggest banks. The CFO also mentioned the delinquency rates and charge-off rates remain below pre-COVID levels, which is great to hear. In terms of personal loans, the average income 164K, FICO 745, and the student loans average income 163K with a FICO of 768. So people that tell you that they're just lending to anybody, 600 FICOs, it's just not true. They remain extremely stringent in their lending standards, and they could loan more money if they want. They reject most applicants for loans. They have the luxury of doing that because the cream of the crop want to come to SoFi. They have the best service, best products, best rates. So in Q2, adjusted EBITDA was 77 million at a 15% margin, which is good indication SoFi is actually cash flow positive. So the outlook, H2 adjusted net revenue is up 26% year over year. Adjusted EBITDA will be 190 million, 18% margin. Also raised full year guidance to 2.03 billion, up 32% year over year. Raised EBITDA to 343 million at a 17% margin. All in all, strong guidance by management. Noto's going to elaborate. They plan to reach an incremental EBITDA margin of 30% consistent over time. Add some topically, you get to 30% margin. This year, we'll have driven a 40% incremental EBITDA margin while growing over 40% as a company. So I'm confident our long-term margins can be 30%. So what the CEO said is not 100% true. I think he misspoke. The ROE is nowhere near 35%. But that said, what the CEO said is true, that SoFi could reach an ROE of 30%, and then SoFi could become the most profitable bank in the US or the world for that matter, with far superior ROE figures than legacy banks. That's what we're talking about. It traded as high as 38.9% of its revenue, which is absurd. Now it's collapsed to just 6.6 times its revenue, which I think is a bit low. I think it could be trading, 8 to 10 times revenue. It's perfectly plausible given the growth, given the margins, given how strong everything's looking, and the fact that the student loans are going to come back, and hopefully as rates come down maybe late next year, home lending will come back. A lot of their business segments will be doing well, but the fact is SoFi does very well in a high rate environment. When they do value the company, they're talking about how just hard it is to value. They think the stock is undervalued. They think stock will go up, so Noto's been buying. That alone is the ultimate bull thesis for SoFi, that they can become a top 10 financial institution with a market cap 140 billion plus, and you'll 15x your money over time. But they're not accounting for all the dilution from stock-based compensation and any other acquisitions that SoFi might do, because that is going to further dilute us shareholders. And even if they reach that market cap, our shares will not be worth 15x. They might be worth 7.5x if they print double the shares over those many years. But anyway, guys, they talk about the risks. Jack of all trades, master of none. This kind of goes to the lack of moat, that they do everything, but it's not unique to what they do. Regulation, thesis. They're talking about robust growth, all three business segments turning profitable, strong technology, cost advantage, switching cost moats. That's one thing I didn't talk about on the moat, is the switching cost. People are very much locked in They're all doing direct deposits. They're getting a really high interest rate. It's going to be costly to leave SoFi, and people are not leaving SoFi in terms of the banking. They're depositing more and more. SoFi has strong management, disrupting the entire banking industry. Note has been talking about the customers they're taking are from the top 5 banks. Despite the positives, I'm not buying the stock due to several reasons. And this is wait and see. You find it hard to understand the business, particularly lending. He doesn't have the knowledge. Secondly, the stock is politically driven, and that's very true. There's so much SoFi's always on a string. So these, political decisions on loan forbearance and the CARES Act and all this stuff can just come in and hammer the stock, which it has over and over again for years. It's just SoFi's business has been doing very well, but the narrative is affected by these regulations. For these reasons, I don't have the conviction to invest in SoFi just yet. I'm staying on the sidelines. I'm not completely dismissing the idea of dismissing. I'm just need more time to fully research and understand the business. SoFi is still in the early innings, one and done financial platform, taking market share from big banks. Crystal clear indication road to being a top 10 financial institution is well underway. So the valuation, they're saying it's undervalued, but it's a wait and see. I'm hearing that a lot. I think it's kind of a foolish position. I'd rather start here under $9 and then hold for the long term, considering the SPAC price was $10 and all that has been accomplished since then. I think you're doing very, very well buying in here in the mid eights, but time will tell. Lots of chatter. It's going back under 7, all this stuff. You always hear. So today, the short interest borrowed change is minus 570. You had 1.8 million return, 1.3 borrowed, 570 net return. Cost to borrow max at 1%. If you look at the short interest over the last couple of weeks, estimated short interest actually gone up by 2%. Free float on loan has gone up considerably. So I'm looking at more pure shorts coming in or increased shorts versus short long or majority long positions. And you see the short interest actually ticking up for the first time in some time. Utilization way up, days to cover way up, shares on loan way up, 23% of free float on loan, shares on loan, 23% increase in just the last 2 weeks. And you're talking about 12% increase in just the last 7 days. So the shorts have dug in their heels a bit, guys, and they're not expecting great numbers in Q3. And quite frankly, neither am I. So let's see what happens, guys. The SoFi stock is flat on the day, kind of fighting back after a very tough morning where it was trying to do that mountain and then just a huge sell-off all the way from like 885 just down to like, 857 in just a couple of minutes. Just typical SoFi, like mechanics having a field day, market makers just beating the hell out of the stock, kicking us around, getting retail to do emotional buys and sells so they can just take your money. But that's what these guys do. Guys, it's the SoFi stock, ticker symbol SOFI. What do I think is going to happen the rest of the week? Just depending on what the Fed does, I think the stock will probably creep up to around that $9 level and probably close similar to what it did last week with a little bit of accumulation, some covering. A lot of it will follow the overall market. Other fintechs, but SoFi's looked pretty strong on down days recently, just hasn't made much of a run on those up days, and when it has, it's been kind of tempered at the end of the day, pushed back down in the mountain and hump pattern. So market makers shorts are all over the stock, but they're very cautious. They're not really wanting to short it back down below 8, and 850 looks pretty good. So we are making those higher lows and even higher highs. Short term and mid-term, the uptrend is there. You have to sort of discount that pump and dump around earnings because I don't feel that was organic trading at all. NASDAQ is coming back. SoFi is looking pretty strong. Guys, my name's Danny Deals. That's Un Poco Moss. Was all over the place today. Didn't make a whole lot of sense. If you're still hanging in there with us, thank you so much. Hope you guys have a great rest of your Tuesday. It's Un Poco Moss. We'll talk at you again really soon. Probably sooner than you'd like. It's Danny Deals. You guys have a good one. Peace.